All right. Good morning, everyone. Happy Hump Day. Happy Fed Day. Happy Juneteenth Eve. Tomorrow the market is closed for Juneteenth, so we do have a holiday. I will be out on Friday. We're taking a family camping trip, which, given the timing, is really nice. Um, yeah, it's been a different 2 weeks. We've been moving, and then we had a family member pass away, literally live on stream last week. I had to step away because my wife got the call from hospice that it was time to go. So, um, yeah, it's been a different 2 weeks, that's for sure. But we are back and basically um, on our regular schedule with videos and everything. So, for those of you that are not part of the group and look for the YouTube videos, I do apologize for the last couple of weeks not having them. But we are back to normal now. Good morning, everybody. Good morning, Daniel. Thanks for joining the stream. Um, Overnight market gave us a little bit. Actually, if we go over to the ES here, the futures, we'll see that our pre-market high and low, we've got a pretty good range to work with before the Fed this afternoon. Your pre-market high 60.62, which is about 20 points higher than we are now on the ES, and your pre-market low down here at 60.17, which is about 25 points lower than we are now. So we're about smack in the middle of the overnight range. So we do have some room to work with for trading. The pre-market high and low are very key levels to trade off of. We rely on the indicator, which we'll go over in just a minute, but for day trading anyway. But those are just levels to watch. There's more often than not, we have days that are not trend days, meaning the market goes back and forth throughout the day, and the pre-market high and low generally contain that movement. And so that's really good areas to trade off of. So big area overnight, 17 to 62, allowing for us to have some tradable entries before, like I said, the Fed really gets the volatility rolling. Option prices probably be expensive today because it's Fed day. So keep that in mind. You can size down on days like today. So if they're too expensive, they're going to cost you too much of your money. Instead of getting a full entry, you can go, half of it or whatever. That's up to you and your capital. But overall, we do have a nice tradable range for today. For those of you that are new, we'll go back to the SPY here. My name is Jacob Gabbard, Invest with Jacob. I've been doing this professionally for several years. I've been trading professionally for the better part of almost a decade. Been doing this group for about 3 or 4 years now, I guess 4 years almost, helping other traders learn to trade, understand trading, understand Elliot wave theory, all that type of stuff. And today the focus is going to be on the custom indicator we built. So it's IWJ Pivot Point Pro. You can see it right here on the tools. It is only for TradingView. I am in TradingView right now. In fact, we'll do this so it's a better screen. It is only for TradingView, but it is outstanding in the market. If you watched yesterday's YouTube video, you saw that this buy was a winner, this sell was a winner, this sell was a winner, this sell was a loser, and then you had this monumental sell straight down off of the 601 area all the way down to 596. So just absolutely crushed it yesterday. Huge day overall. The day before that, we had this buy straight up, monumental winner. And then this buy was actually a winner here. Because of how trend days work, we did not take this sell, but it was also a winner. But another great, great day on Monday. And then if you even back to Friday, you had this buy right here, down here at 590. Well, you had this buy that was a winner, straight up, and then you had this buy here at 597 that went from 597 up to 601. Huge straight up one red bar in the entire rally. Indicator nailed each one of those moves. It had the sell up here. It was on the sell, but it gave you a quick stop out. So unfortunately, this sell was right. You can see the market absolutely cratered, but um, this spike up took you out of it. So still an amazing day. Then just absolutely been killing it lately. And overall, I mean, the indicator overall is a very powerful tool. Is it perfect? No, no market tool is. If any market tool was perfect, that person would be the richest person in the world because they would never miss a trade. So part of trading is losing. There's going to be losing trades. We might even have some today. But far more often, we have winning days and overall winning years. We've proved that over and over again. We are up $29,000 this year in the first 5 months, so through May, on a 100K account. So that is 29% in just 5 months, which is absolutely killing it overall. To set up the indicator, once you get it, you have this blue, which is post-market trading. You have this yellow, which is pre-market trading. We need that turned on, but we don't trade any of this. This just helps the indicator understand where we're at when the market opens. You do need real-time data on futures markets ES and NQ. And the reason for that is if you go to IWJ Pivot Point Pro up here and go to settings, you'll see that in here we are monitoring the futures market on ES and monitoring the futures market on NQ. And you only get buy and sell signals when ES, NQ, and SPY are all in sync, meaning you're seeing broad buying or broad selling, especially off of key levels. And that's what will allow buys and sells to come up on the screen. It's very simple to use. When you get a buy signal, you buy. When you get a sell signal, you sell. It's calculating about 175 different things, and they are weighted at different levels, and almost all of them are forward-looking. So a lot of indicators look backwards. They look at like moving average crosses or, counts, things like that happen in the past, and by the time they trigger a buy or sell, it's too late. We are trying to trigger at bottoms and at tops. Now you see these here, these sell and buys. We only trade till 10 a.m. because day trading is a morning game. That's when volume is high up until the close. You tend to get choppy afternoon behavior. So between the morning and 10 a.m., you get decent volume, decent ranges. And then from 10 a.m. to the close, you tend to get choppier behavior. So we don't trade after 10 a.m. Because of that factor. When I say forward looking, what that means is it is looking to get you in at the right place. So where you may come up, so you have a major resistance level here, your pre-market high, and it's your call resistance as well. You may have an indicator where you come up, hit this call resistance and do this, and then it finally triggers a sell signal down here. What our indicator is watching for is key levels. So for instance, it's looking to get volume off of this level and other things. It's looking at several different factors, but this is being a key level. And once it sees that turn, it's trying to get you in as close to the top as possible. If you look over here, they came up to yesterday's high. So they set the high here. They came up down. They came back to that high. Okay, you got to sell right off of that level. That one actually failed, and that's okay. That was ready to sell. And then you got another sell, again, right off that level, but right at the top of the move. You didn't get a sell signal way down here or way down here. You got it right at the top of the move. The buy signal down here, bottom of the move. I mean, this indicator is really good at finding tops and bottoms. This is the first candle of the day. At the bottom, shot straight up. Up at the top, you get the sell signal, moves down. So you're getting really, really good entries with this because it is forward looking. It knows where the levels are and it measures them, and it doesn't wait for that entry. It gives you the entry basically off of the reversal area. So running a big discount today, 30% off of your first month. And if you want to get the yearly, you get the beginners and advanced Elliot Wave courses for free with that. Morning, Maxime. I don't know why YouTube mutes my mic or makes it so quiet, but I just turned it up, so hopefully that helped. Is the mic issue better now? Morning, Sina. Let me know if you can hear me better now with the microphone. Thank you, Canadian. Sorry about that, guys. For today, our call wall is 600. It's been there for a while. You can see that they fought it quite a bit. In the overnight, they hit it and failed. They've spiked above it and come back below it. So 600 has been a major fight. They get above it and then they lose it. They got above it here. So 600 is our call wall. It's been one for a while. Our put wall is all the way down at 590. So a big spread between 100 points between the call wall and the put wall. If you don't know what those are where the highest level of 0 DTE options are. It's where the market makers want to defend very strongly. You can see in the pre-market they came exactly to that level and failed. And the reason the market makers want to defend, if you don't know what that means or what they are, you essentially treat them as the bookie. And all they're trying to do is so when you buy options or when you buy calls or buy puts, somebody has to sell those to you, and that's generally the market makers. And all they're looking to do is collect the juice on the spread. So there's about a 2-cent spread between the prices a lot of times or all the time, and that spread can be bigger or smaller, but they're trying to collect on that spread millions of times over. So they sell you all of the options. Well, if this is the highest level of option strike, meaning this is where all the people are sitting to go long, and price gets above that level, that means all of these calls are going to start to get paid. Well, the market maker can't be off balance, meaning having all of these calls and not enough puts. So they have to buy calls to balance their position or hedge their position. So that adds fuel to the fire, causing a squeeze. And then the market squeezes to the next resistance zone, which in this case would be 601. Same thing goes for the put wall. When they get down to a put wall, if this HV level was our put wall, if they get below this, well, all of the puts start to get paid, so they have to buy puts, which fuels the market lower, which fuels sell-offs. So these levels are very key in understanding where the market makers have to hedge and where they are going to defend. So essentially what happens is you're going to get one of two things as they come into this zone of very hard rejection or some kind of push above, back test, and squeeze. So these levels become very important in understanding the daily ranges that we're looking at overall for day trading. So when you see a market that's screaming higher and looks like it's going to just blow up, once it gets to this level, if you get a sell signal, that's a great place to sell. Because the probabilities say more often than not the market makers will defend this level, and you will see the market move down. Market makers, when I said earlier, we have way more up and down days than we do trend days. Trend days mean we're essentially moving in one direction the entire day. There may be small pullbacks in there, but essentially you're moving up or down the entire day. Whereas most days you have a high and a low, and the market builds off of those, does something like this. And you can trade off of those. So probability tells us that the pre-market high and pre-market low are going to hold because the market makers are going to defend those areas strongly. Back to the levels. Call resistance 590 or 600, put wall is at 590. So 100 points of ES in between, 10 points of SPY. High volume level 598 or 599, 598, and 596. With 596 being today's highest level, you see the 0 DTE on it. That tells you that's today's highest struck level. So 596, I'm sorry, that's 597. 597 is going to be a major level today for both the bulls and bears, as is 600, and I believe 605 above that. Yeah, 605 is up here as well. So those are all key levels to trade off of and watch. And we treat those again as potential reversal zones. Good morning, Jacob. Is it an indicator that helps you find those levels? Yeah, that's so these levels that I have on here, the call resistance and stuff, they come from Mentor Q. It's a great website. It's a little cheap, a little pricey. I don't have unfortunately, if I like a product, I'll give you a affiliate link because it'll give you a discount and then I get a kickback as well. But I'm also only recommending products that I love. They don't have an affiliate program, so I don't have any links to give you discounts, unfortunately. But the info that they give out is outstanding. It's really good for these levels. These levels are really good, I should say. But it's called Mentor Q. Should be, in general, a slower morning. You generally don't get trend mornings before the Fed announcement. You generally get a little bit of chop. So chop is okay. We've got a big enough range to chop into trade off of. So there's no problem there. Just usually a little slower on Fed days because everybody's waiting for the catalyst at 2. Let's see. We got a few minutes here. As far as the counts go, guys. So some things that we talk about in my room. So if you're not in my room, some things that we talk about that I don't necessarily go over on videos because it's part of paid content. You know, I can't go over everything. That wouldn't be fair to my paid members. But if we look at the daily chart on the ES, you have on the MACD. So the MACD has general levels, and on the daily MACD, 80 tends to be a level on both the high and low that the market turns down. You can see this black line is about 60 to 80. It's actually a slope, so you can see that there's negative divergence. But about 60 to 80 is where the MACD tends to turn down. Above that and below that are extremes. Well, we're in a double extreme here. They came all the way down to negative 180, which caused one of the strongest rallies in market history. So you're at an extreme. Then they went all the way up here to 122, which is also an extreme. And they have negative divergence now at this high. So you can see they made the high on the MACD back here on the 19th of May, this high right here. They've made new highs since, but the MACD has been weak. And you have a bearish cross. The blue line has crossed the orange line, which is bearish. So we are still looking for directly to all-time highs. And you can definitely get on the chart directly to all-time highs. Whereas on the MACD, you get, why won't that there? Thank you. On the MACD, you get a move up with the move to all-time highs that doesn't take out this high. So you still get negative divergence, and then you get this kind of move here. So you get a lower high and then a breakdown on the MACD. So the MACD is showing weakness overall on the daily. You can see that there are times that we cross down. This is a great example of what I'm talking about right here. So you have this high here. Then you make another high on negative divergence. It's slight, but there is negative divergence here. And then you get a meltdown after that in the MACD and a meltdown in the market as well from, whatever that was, 6,200 to 59.30. So about a 300-point drop there. So the MACD is a good indicator, especially when you get the cross. So it almost crossed here, and then it does cross right here, and you get the meltdown in February into March. So we're always looking for crosses. Here's another example of the crosses, comes back, you get negative divergence breakdown. So it's a good indicator, especially of bottoms. The MACD is a really strong indicator of bottoms. When it crosses up, you can see that this is the AB setup. And once it crossed to the bullish side, you get the rip here. Once it crossed to the bullish side, you get the rip here. Once it crossed to the bullish side, you get the rip here. So really good indicator of bottoms here, especially on divergence. But we do have weakness. So the point of this was the MACD on the daily very weak. And even though we are looking for new all-time highs, that is something to keep in mind. The structure has been weak lately. The bulls have been unable to break through this pivot, which is essentially at 6,100. And until we see the bulls fully break through that, there is still the door open for the bears to drop this, break support, and get down through 59.70 and then 5,900. And then ultimately breaking this low here at 5,800 would tell us that we're likely to pull back into this 5,300 zone first and then go back to all-time highs. Or if it's a 5-wave move down, come down, fail, and have a bigger breakdown. So we just need to, hopefully the Fed is the catalyst. We need a catalyst to kind of push us out of this zone we've been in. You can see that for the last month or so, we've been kind of sideways, kind of this weak rising wedge, ending diagonal type structure. So if we continue to stay in that and fail, ending diagonals fail very strongly, we would look for a very sharp reversal today with the Fed. So it's a little bit of a mixed bag, which is why we don't have any kind of swing trade going right now, because you have a bullish setup to new all-time highs, but bearish indications on other things. So when we don't have confluence, we don't have a setup, we don't trade it, we just have a path. So our primary path is higher, but that doesn't mean we're trading that path. It simply means that that's the expectation, and if we get a setup, then we will trade the path. We don't want to trade the path just willy-nilly and say, oh, well, the path is higher, we should be long. We want to see a setup. So this right here was an incredible down here was an incredible setup. This AB with the MACD crossing, and you got the nice rip from 5,300 to 6,000. So you just got to look for setups off of what the primary is. So you start with a path, and that tells us that the probabilities of the market moving in that direction are highest. Highest can mean 51.49. It can mean 65.35. About the highest probable path is probably 65-70% of the time. So you're still going to fail a third of the time, or the path is going to fail a third of the time, but more often than not, it's still going to follow that path. So if we get a path and then we get a setup, that gives us a high quality trading opportunity. If we just have a path, then we don't have a high quality setup. So we want to make sure we have a high quality setup, as well as, coinciding with, the indicators on the chart, as well as coinciding with our path in Elliot wave theory. So right now, as I said, the direct path is higher, or the primary path is directly higher, but we do have weakness all over the place. And so we want to be very cautious about just trading long willy-nilly without any kind of setup. And right now we just don't have a very good setup. Do you use the MACD to help track Elliott waves? Not necessarily to track the waves, more to track the tops and bottom areas. And that's not to say that I use the MACD exclusively. So I'm looking for, say, I have a 3-4 setup, and I'm looking for this to be some kind of top. So when I see that, if I come into the daily MACD, I have a move up into this top right here that I'm looking for. And then I have a cross, and then I have a negative divergence cross. So I have a cross here, and then a cross again off of negative divergence, right? And that tells me that this is a weak high, or this high is weakening, and that we have a potential move down on our hands. And then we had a 300-point move down. Same thing goes for bottoms. I have a move down and a low. They come up and cross bullishly, and maybe it's off of a place I'm looking for a low. Then that's a really good place for me to say, hey, this is ready to turn over, and the bottom might be in. And we're also going to be looking for trade setups off of that kind of stuff. So the MACD is very valuable in starting to, especially bottoms. It's much better on bottoms than it is tops. but it starts to give you warnings that the market is weakening. And that can take some time. Obviously, this was May 19th when they hit this high. We are still up around those highs, and we are a month later. So it can take some time for tops to play out. Topping is generally a process where bottoming is generally some sort of spike and reversal. So it's much better at bottoms than tops, but I use it more for that than waves. And then on the hourly MACD, so the hourly is also very, very strong. So I use the daily and the hourly. On the hourly, 20 is your guideline. So if you go to the 20 level, which is right about here, you're going to see that more often than not, of course, you're going to have extremes, but more often than not, at the level 20, if I just draw a line across at 20, let me come in here down to 20, that's basically 20. You're going to see that once they get above that line, right here, or at that line, so just above it here, if you see a turn down, it's very likely to have good follow through. So right here, you're looking at this big drop on the hourly. Right here, you're looking at this drop on the hourly. So when you see it get above 20 and then turn over into a bearish set, that generally tells you we're going to start to turn down. You don't see it get above 20 very often. So in the last, this is 1, 2, 3, 4, 5, 6 days out of the last 2 months almost. So about 3 days a month, about 10% of the time, it will get above that line. And the same thing goes for 20 on the bottom. So if we go down to 20, right about here, and it's an approximate number. I mean, it doesn't have to be 20 exactly, but you see that most of the time when it gets down into that 20 zone, it's going to turn over as well. Does it have extremes? Of course it does. It has one here, has one here, and has one here. But for the most part, it's going to be contained inside that 20 to 20 range. And those are the places you're looking for reversals in the short term. So these are shorter term swing type setups, especially, again, bottoming. You get this bottoming signal cross here where they cross bullishly. And on the chart, you get a really nice rip higher. You get this crossing signal high, and they, it's not a huge one, 55.29 down to 54.04, so 120 points on an hourly chart. It's pretty good. They're not all going to be 500-point moves. But you're just looking for them to get into this extreme zone, cross over, or turn down and cross over. And then once you see that, that opens the door for tops and bottoms. So the MACD is extremely useful for that type of stuff. Head and shoulders forming if we fall. I don't track head and shoulders patterns. The only reason is because Elliot has them. This is why when everybody talks about Elliott wave theory and says, oh, magic waves, blah, blah, blah. Well, it's actually built in technical analysis. If you look at a 5-wave structure here, we got 2 minutes, so I'll do this quick. If you look at a 5-wave structure followed by a 3-wave structure, well, what do you have in these structures? Well, you have a low, high, a higher low, higher high, higher low, higher high. These are all standard price action structures. You also have this shoulder, head, shoulder pattern that plays out. You also have, and when waves are constructed, they come up to resistance, pull back, come up to resistance, pull back, squeeze. I mean, it's all based on, and this is how wave threes play out. It's all based on price action and technical analysis. Elliot was way ahead of his time in that. And because people don't understand these things, they just think it's some random level and it's some random wave and some random pattern. And that's not it. It's truly measurable. It's truly repeatable. And you see it over and over again. Now, what I will caveat that with is since 2022, we have been in very, very big corrective structures, which means you don't have typical price action, which has made the market just harder to trade in general. It's why so many people are confused. Oh, the market's done. It's going down. It's a crash. Oh, the market's going to new all-time highs. I mean, people are always confused about the market, but in this case, that's why. We're getting ready to open here, so let's get ready to trade. We're going to be looking for a buy signal to start. And I know that because there's a sell signal on the chart, and we're always looking opposite. So we're going to be Let me get that ready because I'm a little behind because I was babbling. So we got about $2 option prices today, telling us they're looking for about a 40 to 50 point move. Can definitely be more or less than that, but that's what they're expecting. They being the market makers. We're going to be at about a 598 call here. If we get a, there it is. Okay, we got a buy signal at 222. And our stop is going to be 597.70, 597.70. We'll talk about the disappearing signal here in just a second. We'll see if this is going to be able to hold. So anytime you see that the buy signal appear, you take the trade. Even if it disappears, it doesn't matter. You don't get out of the trade when it disappears. You just take the trade. And the reason for that is you're trying to get the best entry possible. And very often that buy signal comes or sell signal comes and the market continues to move very quickly in that direction. And if you wait for the bar to close, you're going to miss the one bar winners that we get. You're going to miss a lot of really good entries and a lot of good trades. So we take it right away, and if it stops out, it stops out. We don't worry about any singular trade. Like if we get stopped here, which we may. If we get stopped here, then we go on to the next trade. That's part of trading and part of life. It's a process. We know that we're not going to win every trade, and we know that we need to take the good setups as they come. Okay, we did stop out there. We got 191. And we'll look for the next one, which will also be a long. And probably right off of this area. If they bounce this back up and give us a buy, we will take that again. Because we are coming off of this support level. It's trying to give us the buy signal off of this support right here, which is this pre-market low, even though we know the real pre-market low is a little lower. On the SPY, it gives you the yellow version of the pre-market low, not the overall. So tried to give us a long there off of that support. We'll see if they're able to hold it here. It's also a high volume level just above it and a high volume level just below it. So this is going to be a big support zone overall. If the bears push through that, that could be indicative of a bigger move down. But ultimately, we're going to need to see them push through 595.65 here. Internals are mixed. So that tells you that generally the market is not all pointing in the same direction, so that generally support and resistance will hold when the internals are mixed. Once we're in a sell cycle, so you got to sell right here before the market opened. Once we're in a sell cycle, you're not going to get issued another sell as the market moves down. So that buy came in and then it got taken away, which just means we're still in this sell, right? If that buy had stayed on the chart, then we could talk about what comes next, but it didn't. So we're still in this selling cycle. So the only two options we can see right now are a buy signal, which we got but failed, or a sell stop. So once we see a sell signal on the chart, we know that the next opportunity for us will be a buy, unless we see a stop, and then it could be a sell again. So I think I have my stops turned off because I don't use them personally, and the reason I don't is I set my own stops, but I do have stops for people that don't know where or how to sell their stops or how to set their stops. So right here you had a sell signal that came down, you got a sell stop. Well, that means that the next sign after this sell stop is going to be a sell, which we got right here. And now the next sign is going to be a buy, unless we get another sell stop, and then it would be a sell. So we have a sell on the screen, which means our next thing is going to be a buy. You're always looking at the opposite signal. Do you have an affiliate link for TradingView? Yes. So once you sign up for the indicator, in there, if you read the instructions, one of the things will be you can sign up for TradingView and get a discount with my affiliate link. Sorry, guys. I like to move my screen. I don't know why. It just helps me stay focused. I don't know why I do it. It's just habit. So I move my screen around while I'm trading to different levels of view to make it easier to see certain things. But if that's annoying, I apologize. But yeah, I do have a TradingView link. Once you sign up, it'll say click here to sign up for TradingView, and you get a discount on your TradingView sign up. All right, looking for another buy here. We're coming back into VWAP, so a rejection likely. When I say rejection, we're talking about 5-minute chart rejection, so from like 598 down to like 597.50 or something, but they're pushing through directly here, which is pretty good. Waiting on the NASDAQ to catch up. So the ES is ready to go long. The NASDAQ is not. You can't see that. That's just, since I made the indicator, I see how it works. I have the back end that I can see. But we're waiting on a long signal here. NASDAQ really needs to pick up the pace is the deal. And this is what we're looking for. So even though the ES and the SPY are ready to go long here, they want to go long, the NASDAQ is lagging. And if all three markets aren't going, if the NASDAQ is weak, the ES isn't going to take off and rocket ride. So this is the reason you're not getting a long yet, because it says, hey, NASDAQ isn't on board with this move up. I mean, they've moved up a little bit here, but not as much as ES or SPY. And so it's trying to keep you out of things that line up as chop or potential weak moves, dead cat bounces or fake sell-offs, fake down breakdowns, those types of things. So it's trying to make sure that we have broad buying and broad strength before it issues a buy or sell. So that we don't get trapped in a lot of choppy markets. That's another big benefit. Most indicators are only looking at one chart, so that they would only be looking at the SPY. And if the SPY says, yeah, the SPY looks great, well, if you're looking at the NQ and the NQ or the Qs are not looking great, in other words, they're in, you have a green bar here and a red bar there, you're very unlikely for that green bar to play out. So by checking both charts, we save ourselves from a lot of choppy or bad trades. Do we still have trades that don't work out. Obviously, we just had one. That's just trading. But if you're focused on any one trade, then you're not understanding trading. Trading is about the numbers. It's about probabilities. All you're looking at is taking high probability setups and cashing in on those setups. You're just looking at finding an edge and cashing in on that edge over and over and over again. So as I said, they came to VWAP. Very unlikely they blast through VWAP the first time. They kind of pushed above it, and now they're pushing back below it. This is kind of how it goes. They'll wrestle with it for maybe 1 bar, maybe 3, but they very rarely just blast through VWAP in the 21. That's why I have them on the screen. They're very often good profit-taking areas when the trade sets up that way. And speaking of profit-taking, if you're new to all of this, we have our baseline. So your baseline's right here. Okay, we take our first profit at about 20%, and then we close half of our trade there. And the reason we do that is because when we stop out, those small winners, those 20% winners, cancel out our losers. So all of that cancels out. Now, when we get a runner that hits the 20% and breaks through, or even to the downside for short, all of this above the 20% line becomes profit. So we take our small wins to cancel out our stops, and then every time we get a runner, that essentially becomes our profit. So our risk reward is really strong. It keeps us in a really, really good place. We never can get beat up too bad. Our losses are pretty much pretty small, and they're covered by the small wins. And then we get, we have a buy here, so let's take that. We're in at 201. And our stop is going to be 597.50. Oh, shoot. Guys, that's a call. If you're in the rooms, that's my bad. Copied the wrong thing. Okay, that's fixed. Okay, we're going to take a second swing at a long here. See if they can get through VWAP in the 21. But essentially, trading is just a numbers game. It's just like sales. You have to call a whole bunch of people to make sales, and then you make money. Well, trading is all about taking like 60% win setups, 60 to 65% wins, right? So if you have a trade setup that wins 60, 65% of the time, and you have a good risk reward structure with that trade, then over time you are going to beat the market. Does that mean you're going to beat it every day? No. Does it mean you're going to beat it every trade? No. Week? No. Month? No. But over time, over a year? Yeah. We always have a strong overall winning percentage as far as our gains. Last year we made 30% on our money on a 100K account. This year we're already up 30% because we've improved the indicator. We've improved where it fails. And those things help us trade better. So you have to understand trading is a long-term numbers game. It is not a one day or one trade thing. If I lose 5 trades today, it doesn't matter to me. I mean, obviously it matters. Nobody ever wants to lose 5 trades, but you know what I mean? It's certainly not like I'm going to be like, oh my God, this doesn't work. Everything's terrible. That's why I give you 30 days as for the money back guarantee, because I want you to try it for at least a month, because everybody can have a bad day, bad week. Most months we win. And in those months, we can win quite a bit. Our losing months are always pretty small. Have we had bad months? Of course. We've had last November and December were bad, but we still made 30% on the year on our account. All right, moving up here. We got in at 201, so our first take is 20% on 201. That's 240, basically. If they can get, so they're going to have to get above the opening print right here at 598.46, whatever this high is. 598.45. They get above that, they can start to stretch out toward the pre-market high and the call wall at 600. So we'll see if they're able to do that. Obviously, 599 is a high volume level. That will be some resistance as well. Internals are improving. The ADD has climbed. The Vold is turning green, so good sign for the bulls early on. This is early part of the day, especially on a day like Fed Day, where most of the people are going to be waiting for later on in the day to see what happens. Did you say you use manual stops? Not manual per se, but I set them manually. So I enter the trade. So let's say we got in at 598 on the SPY for a long, which is about where we got in. Then my stop is 50 cents of SPY price lower, so that's going to be 597.50. Now on days like today, it's a little more volatile because of the Fed, so I want to give it a little bit wider of a stop. So we were at, I think, 598.05 or 598.10 when I got in, and I set it to 597.50, so it was like a 60-cent stop. So I gave it like an extra 10 cents for that, so that the volatility doesn't stop us out as much, because you're going to get bigger kind of swings on days like today. How do you anchor your VWAP? I don't. I just use standard VWAP. I don't use anchors. I try to keep it as simple as possible, because that's how you trade the best. If you have 1,000 things on your chart, you're going to have analysis paralysis, and you're going to get confused, and you're going to say, "Oh, this is this and this is that." Can I be missing some things that might help? Sure, but this is what's easy, and I keep it simple, stupid in all of my trading, because the more complicated you make it, the more complicated trading is going to be, and it doesn't need to be complicated to win. It needs to be smart. It needs to be based on good strategy. It needs to be based on discipline, but it doesn't need to be complicated. Complicated is silly. So I don't anchor my VWAP. I don't mess with all that stuff. I have one moving average, the 21 for day trading, and really for swing trading too. However, there are other moving averages that matter in swing trading, like the 50 and the 100 and the 200, that we keep an eye on. But overall, we keep it simple and repeat the edge. So that's one of the things I talk about in my podcast. Once you find the edge, apply that edge relentlessly. Every chance you get, apply the edge, because that's what gives you the numbers to beat the market. Again, trading is a numbers game. Anybody that tells you they're hitting 90% of their trades either has a terrible risk-reward ratio, is taking like 1 cent winners, or is lying. Most of the time they're lying. So anybody that tells you they're hitting trades like that, stay away from, in my opinion. You're just going to have to understand it's not a get-rich-quick scheme. I don't peddle bullshit. We trade real trades. We trade the right way, and we understand that this has not become a billionaire overnight. It is grind and be disciplined, and that's how you make money. And that's why it's hard, because people don't want to grind and be disciplined. They want to be rich today. So they overtrade, or they trade too big, or they trade their whole account hoping to hit that big trade, and they might hit it here and there, but inevitably they're going to go broke. And I don't know how many times people have to do that before they realize that that's not the way to do it. Also, just because I do it my way doesn't mean you have to do it this way. What I would encourage you to do is find someone who trades in a way you like, who is a reputable trader, and really try to learn so you can do it on your own, because you really shouldn't be copying anyone, even though that's my business. I'll tell you straight up, you should know how to trade your own money, but you can copy someone until you figure that out. That's okay. But find someone that you know is a reputable trader and truly copy what they do, that you like their trading style. You don't have to like my trading style. That's okay. I get that. But truly copy what they do. Don't go, "Oh, I made it better by." If you're buying an indicator from someone, or you're buying a service from someone who is a trading professional or has proven that they are, which I believe I have, but that's up to you guys to decide. If you're buying from someone and you're not following them exactly, then why are you buying it? It's like having a recipe for the best cake you could ever make. Not saying that whatever. There's our first take, 241. So we're going to take 241 here, close half. 1 second, guys. We'll get back to the cake story. And we'll set our stops to $2. One sec here. Doing more than one thing. All right. So if you have a recipe for the best cake in the world, and you want to make, you've never made that cake before, and in fact most of the cakes you make suck, and you pay for that recipe so that you can finally make a birthday cake for somebody that's amazing or whatever, and then you just say, but I'm going to add a pound of salt and see how it goes. Why? You have the recipe for the best cake ever. Just make the cake. It'll be delicious. Well, I wanted to put chocolate chips on top. Well, cool, you can do that. But you're kind of messing with what works. And if you haven't been able to put together what works, then you shouldn't be messing with anything. This isn't a knock on anybody. I was a person who couldn't put together what worked. I failed a lot in trading before I was good at it because most of it's emotion. I can tell you right now, most of it is emotion. Boredom is an emotion, fear of missing out, fear of losing everything, fear of entering a trade, fear of everything. Most of it is emotion. People can't stand, like a lot of people would have just closed the trade there at 241 and said, I made my 20%, I'm done. Well, I'm going to go ahead and collect the rest of this, assuming it goes up. And more often than not, my bottom line is going to be much greater because I understand you have to maximize your wins. You can't just close out. That's why trailing stops are so powerful. Speaking of which, we're going to move our stops up to 210. I usually keep about a 50-cent trailing stop. Just depends on what's going on and what I started at. When we first took at 240, my stop was 40 cents because I never let a good trade go bad. That's another thing to note. Never take a winner and turn it into a loser. That's just silly. So assuming they push on up here, we'll take our next profit here at 600. That is the call resistance. We'll see if they're able to hold there. But that's a good place to take profit because that should normally be a rejection point. That's assuming they get there. They are coming up on 7. I wonder if we have any 10 o'clock data today that will be a catalyst. Let's see, today is Wednesday, 8:30, 8:30. No, we just have Fed. Okay, so no 10 o'clock data today. NQ is looking a little bit weak here. It's already put together a doji candle and potential to reverse. Not saying it's going to, but it is looking a little weak. So we'll need it to get back on board to continue this move up. One thing we like to look at for moves is supporting evidence. So we know that obviously the Qs and the ES were on board with this buy, but we want to look at things like the banks. So XLF is up 0.5%, so they're leading. That's good. The transports are up 0.5%, so they're leading to the upside. That's good. Semiconductors up over 0.5%. They're leading to the upside. That's good. Nvidia's flat. Mag 7 not looking hugely up. Some of them are okay. Netflix, Amazon, Tesla, all doing well. So we do have evidence that the market wants to be green today. So that is a good sign for our long. You want to see RTY green as well? It is. It is actually leading to the upside as well over the NQ and the ES. So those are all good signs for our long. Now we are on Fed day, so things are going to probably be choppy and change. So they're going to look bullish till we get to wherever we're getting to, and then they'll look bearish. But we have good evidence for our long currently. While we wait to see how this trade ends up playing out, are there questions about the indicator? Are there questions about our trading? Our trading rooms are great, guys. If you're not in our trading rooms, they're outstanding. You do get a 7-day free trial for that. I'd encourage you to sign up and check it out. PT does an incredible job. He trades futures, so if you're a futures trader, that's the place to be. The indicator can be used on any stock, any index, futures, whatever. It can be used on all of it. I just trade the SPY personally, so that's why I have it set up this way. But if you wanted to use it on Apple, you would switch to the Apple chart. You'd go to your indicator settings, and on your inputs, you would change both of these to say Apple. You just click in there and type in Apple's symbol and make sure they both say Apple and change this to 1. And then you hit OK. And then it's on the Apple chart, and you can look at that. A quick example here. Let's see, we've got 210 as our stop, right? So on Microsoft, if we go to the weekly, so I use the weekly for bigger swing trades. And we go to our settings, and we change this to MSFT. So we'll do an example of how to set it up for another stock, because Microsoft here I liked a lot. We change this to 1, and we hit OK. Now if we zoom out here, you'll see that the indicator provided you with, if we can get to it, so far down, a buy signal all the way back here, right near the bottom. So they went up, came down, came back up, and you got the buy signal. Now on the weekly, we take it at the end of the week to make sure that that chart holds. So we would have got in at about 391, and Microsoft is currently at 477. So a 78-point move higher, and actually it was up at 480. So an 89, I'm sorry, 9 and 80. So a 89-point move higher, over 20% just in actual stock price. So 20% up in just Microsoft stock price. If you had options here, 1, 2, 3, 4, 5, 6, 7, 8, in 2 months time, you're up 20% on Microsoft off of this buy signal. You also had this sell signal right at the top that killed. It came from 415 all the way down to 348. Did you get some chop in here? Yeah, but these 2 trades alone pay for your entire year of everything. I mean, these 2 trades are just monsters. And just like anything else, you're going to get some chop in here. But the setups are just so strong. You got this sell signal, which is really good. I mean, just so many different applications for this that it's really strong. Really, really, really strong. So let's go back to the 5-minute. On SPY. Okay. Back to our settings. Okay, I mentioned that NASDAQ was looking weak, and it has pulled down, as has ES now. Look for a back test of the 21. If they can hold there, they can continue to be bullish. Otherwise, a potential breakdown. Um, in essence, what we're looking for on a trend day is we're not there yet, but you're looking for the market to move up. If it's going to be a trend to the upside, up to at least the pre-market high, and then a back test of the 21, and then back over the pre-market high. That's the first major indication of a trend day. Then every pullback should hold VWAP and the 21. If it gets below that, that could be a warning that the trend is over. But when we start to see trend days materialize, that's typically how it works. Still need the NQ to come back to life. It's still trying to fall here, and it will bring the ES down with it if it goes. ES is trying to turn this into a hammer, while NQ still has a fairly full-bodied red bar. But if NQ can flip, we should be able to go hit this 600 and take another level of profit. There we go. Great indicator. Is the contact portion of your website the best way to contact you? I have a question. Shoot me an email, jacob@investwithjacob.com. You can do it on the contact portion. It's just easier to email me directly, though. We're going to move our stops to 220. Oh, there's the breakout. All right, guys. Now, just because it's going fast doesn't mean we're not going to take profit up here at 600, because that's what they do. They take it in fast, then reject it extremely hard, and leave everybody holding the bag up here because they didn't take profit. They thought it was going to break through. So we're going to be ready to take profit here shortly. Now, not complete profit. We're going to close another half of our remaining and leave runners, because that's what you do to maximize in case they do break through here. Oh, don't be those dirty guys that do that. Guys, 30% off your first month of the indicator. Um, After that, it will be full price, but you get a 30-day money-back guarantee. So you can try it for those first 30 days at a discounted rate, and if you don't like it, you get that discounted rate back. So you didn't even risk anything. You can just put it on your chart and paper trade it. You can just put it on your chart and watch it and see what it does, how it works, what you think of it. And if you don't like it after 30 days, you can get your money back. If you do, like most people do, you keep it and kill the market. We're having a lot of fun with it, and I want you guys to be a part of it too. So make sure you check it out. This, we produce consistent winners, and if you just follow the rules, it makes trading super simple. You want to be a robot when you trade. You definitely don't want to have that emotion mindset. And this helps you do that by giving you clear entries and exits. And if you just follow those and click when it happens, then you're good. Consolidating a little bit under the pre-market high here. If they push back up towards this spike here, we'll probably take some profit. They can definitely come up short and turn down, which they're trying to do now. But I would like to see them tag 600, but we can take, if they get back up in this area, we'll take some profit. I probably got a little greedy there. Should have done it the first time through, but we'll see if they can push back up again. Huh. Ask and you shall receive, I guess. All right, let's take 285 here for another half of remaining, and we're going to set our stops to 240. We tighten our stops a little bit here because we are getting close to the rejection area that we think the market could collapse from. If they push through, then we have runners, So I'm going to be a nice winning trade regardless. But hopefully we can get a runner and make it a really big winner. A really good winner. Does the VWAP and the 21 EMA confirm how price can act? Trying to understand how to identify trend day. So I give full instructions on how to identify a trend day once you get the indicator. But essentially, it has to break the pre-market high. Otherwise, it's still in the range from the overnight. Or the pre-market low. If it's a trend day down, it can trend in either direction. Generally, you want to look at the futures. I mean, we want to start with the SPY, but the futures are where we look for our high. They're coming into at 60.62 here. And the pre-market low is all the way down here at 60.17. So you'd want to see them break through the pre-market high, even if they poke above it. If they just give you something like this. All back tests have to hold VWAP in the 21. And then any push back above this high right here becomes a trend day in most instances. Can they fail? Can they come up and fail? Absolutely. But more often than not, when they do that, that is going to end up being a trend day. All right, so we were able to get 285 on that last spike up. They got closer to 600 there within, the pre-market high. They were within 14 cents of that and 8 cents of the call wall. So I do like that we got pretty close to the high there on that last take, and we've reduced our trailing stop to 40 cents instead of 50 cents because this is a likely failure zone, and we want to capture as much profit as we can around it. If it doesn't fail, then we just ride our runners. All emotionless now. It's always emotionless for me, but now you have nothing to worry about. No matter what happens, the rest of this trade, you are going to make money. This is one of those times where we can absolutely reverse trade, meaning if we hit this zone up here and they turn it down sharply, we can get a sell signal where we would close our long and flip to sell, and then have a winning trade to the downside as well. So we're always ready for those types of things. We always understand that that's a possibility. But for now, we're just riding our runners up until they're done pushing. Guys, if you're getting value out of this, if you took this trade and made money, if you're finding anything important on this stream, please hit the thumbs up button. It helps me reach a bigger audience. Please share, comment, anything you can do to interact with the video. Not comment in the chat, like comment below the video. You could do both. Obviously, commenting in the chat is great as well. But anything you want to do to show your appreciation, I would appreciate it. Nice. We're going to move our stops up to 260. And this is what we talk about when I talk about at the beginning that 20%. So we take that. We had a small loser to start the day, right? We had a buy signal on this red bar. It obviously failed. We come back. We get the next buy signal. We take that short profit that cancels out the small loss. And now our runner is paying. And that just goes into our pocket. All right, so they've pushed through the 600 level and the pre-market high. That is a bullish development. We'll see if they're able to sustain it. This is generally going to be an area that they're going to give you a pullback off of, so that maybe give you this. We're going to move our stops to 270. Thank you. I always like your live. Thank you, Chen. I appreciate that. I try to give out some knowledge in between trades, make it valuable when we're not trading, but we are trading now and winning, so it's always a plus. I'd be a little bit surprised if they don't give some sort of pullback here. That would be fairly bullish development and opens the door to 605. Obviously not in a direct line, but if we zoom out a little here, you can see that our 603 level is our next high volume level, and our 0 DTEs up here at 605. So with, Fed catalyst, it does open the door. There's not much in between here and 603. So if they don't give us any kind of pullback here, you've got yesterday's high at 601.75 basically. where they could pull back off of, and then 603, and then 605. So this area here very important for the bears if they're trying to contain this squeeze. Otherwise, the market makers are going to have to jump on board with these calls, and you're going to see this squeeze up here pretty quickly. On the website, I don't see a spot to enter the promo code. Well, let me show you. So if you go to investwithjacob.com, you go to membership plans. I'm going to select the yearly because it's going to tell me I already have the indicator. So I'm going to click here. It's the same. So click whatever product you want. Scroll down, and it says right here, have a coupon. So sorry, I try to get down off my normal information, but have a coupon. And then it says coupon code right here. So right above pay with credit card, there's a little blue have a coupon. You click on that, and it'll give you this coupon code, and then you enter the coupon code. We can also look at what happens when you buy it. So you have to fill out your TradingView form here. So I get your TradingView username, and you can always go back and do this. Bookmark this page, by the way, so you don't lose it. Then it tells you will need at least an essential account on TradingView. You can get a 30-day free trial, I believe, with that. Yeah, with that. I believe. Double check that. You need this real-time data, CBOT, CME, COMEX, E-mini included. And then there is a link to get you a TradingView account at a discount. So you click this, and it'll take you to TradingView. You can sign up and get a discounted rate. And then it tells you how to set up TradingView, how to set up the indicator, the day trading strategy, the trend day strategy, and the weekly swing strategy. So it shows you all of it, how to set it up and do it. It's all videos, very simple, easy to follow. I usually get you set up right after the stream within 20, 30 minutes of when we stop live streaming. Okay, we're going to set our stops to $3. You guys having fun yet? Our stops are now 50% above our buying price, so that's always nice. I mean, I don't know what you want in an indicator that doesn't give you the buy signal, that just rolls. I've shown you the last several days. This is not an uncommon thing. You know, if we look at yesterday, you had this sell signal that was an absolute crusher. If you look at the day before that, you had this buy signal right at the open that was an absolute crusher straight up right here. I mean, just absolutely killing, just killing. And if you want to be part of it, guys, we're here. I'm here to help you. I want you to make money. I want you to beat the market, and that's what we do on a pretty consistent basis. We're going to move our stops to 320. Oops. I got to put my cursor in the right place, I guess. Oh my goodness, what is going on here? Where's my mouse? We're going to close another half of our remaining for 365. Sorry, guys, my mouse lost its battery, so I had to go grab a battery real quick. There we go. All right. So we got above the call wall. You're seeing a squeeze here. They've gone up a point here in 2 bars because the market makers have to hedge until they can control the buying. Glad that this second trade compensate for the first one and even make enough money to afford my recent yearly indicator subscription. There you go, Maxime. Paid for your yearly indicator today. Perfect. And that's the thing, guys. This thing pays for itself so quickly. If you just follow the rules, it's super simple. It is, I think it's unmatched as an indicator. I've tried lots and lots of them. I've looked what they're built by, how they're built, and how ours works is very different and very powerful. And of course, again, it's not a silver bullet. It's not going to win 100% of the time, but if you follow the rules, you are going to make money hand over fist with it. And you're getting the first month 30% off to try it out and a 30-day money-back guarantee. So there's really nothing to lose here. This is the best time to do it. That coupon code will go away after the live stream is over. So you won't be able to take advantage of those deals once this stream ends. These are my favorite boring days, being bored watching the market go in a one direction and make money. Pretty easy, stress-free day. Like I said, if you guys are liking it, please hit that like button. I really appreciate it. Share this stream so that your friends and family, if they're traders, can be part of it. Comment, subscribe, all great things. My biggest challenge is not to follow the rules. Yeah, that's a lot of people's. I was quite unlucky so far because I missed all the running trades because of kindergarten visit, etc. So it's good to take one. Yeah, it can be frustrating if you have to sit out. Yesterday I had to take a call, so I didn't actually get that sell. The rest of the group did, but that sell was a monster to the downside, and I had to take a phone call, so I missed it, unfortunately. But the indicator had it absolutely crushed, which is why you guys should have the indicator, because I'm not always going to be here to hold your hand, and it is. And when I retire one day from doing this, I want everybody to have the indicator so that they can continue to make profitable trades without me having to kind of do it with them or for them. You had mentioned someone that does futures with the indicator, because I feel that there could be different type of rules using the indicator with futures. No different rules. All the rules always the same. PT doesn't use the indicator. He trades futures, though. So I mentioned PT does trade futures. There are lots of people that do trade futures with the indicator. It's as simple as changing. So you would just go to the ES chart instead. You can see you got the buy signal on the ES chart down here as well. And you would just change these two. Change ES to SPY. So all you do is swap out ES for SPY here, and it would work just fine on the futures. It works on any chart. It works with gold, works with Bitcoin, works with futures, works with indexes, works with stocks. Yeah, I wouldn't use it on something that's as choppy as, say, currency is. I don't like currency. I've never traded it. Don't want to trade it. Every time I look at the charts, they hurt my head. So I don't know that I would love it on currency because it's so choppy. I would want highly traded things. So you're not going to want to trade this on, I don't know, Jim's feed company because it's only getting 10,000 shares moved a day. There's no liquidity. There's no point. You're going to want to trade it on things like the Mag 7, things that are heavily traded, things that have liquidity, things that are moving. You don't want to trade slow moving dividend stocks like a Verizon or something. You want to trade stocks that have movement. One huge benefit to my group as we talk about 401k stuff. Last April, I told my group to move into precious metals. I gave them a fund. I'll show that to you now. Open in a new tab. So I told them what fund to move into in April of last year. So April of 24 is right. March, February, April, right here. So it was at 49 when we got in. It is currently sitting at 91. I moved my 401k money into this, and I've almost doubled it. So a 100%, 90% gain, I guess is roughly what that is. 80, 85, I don't know, but around 80% gain on my 401k in a year and 2 months. That $49 looks pretty valuable when you get information like that, and we do it all the time. I give you, what I'm doing with my 401k money and why. I told everybody to get out of the S&P, move into precious metals, and we're just seeing them absolutely crush. So lots of benefits to being in my room other than just day trading and swing trading. We talk about long-term stuff. We talk about all the different stocks on the daily call. We talk about any stocks that you guys want to go over on the daily call. So while the room is focused around the SPY, the NQ, and the ES, the daily call goes over any stocks you want to see, and we talk about 401ks and how to utilize your money the most effective way. Hello, Jacob. How do you come up with the call resistance level or vice versa for put support level? So that is Mentor Q right here. They have an indicator. You got to go to their website and purchase their product. I think it's like $99 a month. Unfortunately, I don't have an affiliate link. I would definitely use it for them. FYI, I don't peddle. And what I mean by that is I don't just randomly throw out affiliate links because I want to make money. I do very well. I don't need affiliate money that much. I'll take anything anybody wants to contribute, but I'm not going to go out and just say, buy this because they decided to give me kickbacks. I only recommend stuff, one, that I use or have used and maybe it was a beginner's tool or something and I don't need to use it anymore, but I have used it. So it's something that I have or will continue to use and something that I love. I'll never, ever give you guys an affiliate link for something that I don't believe in myself. So keep that in mind. If I do, I'm never just trying to get affiliate commissions. I only give links to things that I love. TradingView, I think it's a great tool. They do a great job with my indicator of keeping my code private. It's why it's not on Thinkorswim, because they won't hide the code, and I'm not giving away my code, so you can only get it on TradingView. So the platforms that I love and the tools that I love, I have affiliate links for. Unfortunately, MentorQ doesn't do affiliate links, so I don't have one for them. We are going to move our stops up to 340. If you're just joining the stream, guys, we got a buy signal on the fourth candle of the day. We actually had one here on the first candle that was a quick loser, but then we got the second one here, and it's been an absolute monster, trading straight up the entire day. 11 out of 12 green candles here, and you got in, right after the capture of VWAP, which is a pretty solid area to expect a push. And that's exactly what we saw. They've even broken through resistance. So great day. Highlighting our indicator and why it is so powerful. Great discount codes. Take advantage of those, guys. You only see them on the live streams, and you'd have to wait again to get them. So bulls are trying to push the market up here. And again, I talked about earlier in the day, the primary path is higher. However, there is a lot of weakness in some indicators like the MACD and some structural things. So we do still look directly to all-time highs, but cautiously. It's not something that I consider tradable because of those discrepancies. So we're just cautiously optimistic for higher right now, and we'll see exactly what happens later today when we get the full catalyst of the Fed. I will say that even though volume's kind of weak, this is a fairly impressive move by the bulls to come into this 600 level, give it a tepid rejection, and then just blast off right through it. That is a strong sign from the bulls. Is PT in your room, or does he have some sort of socials? So it's just it's all in Discord. So here, I'll bring over my Discord screen real quick. So here's my Discord screen where I'm updating everybody on I don't think you guys are able to see that, are you? Hold on, let me do it a different way. That's odd. There we go. So here's the Discord room. So you have my Invest with Jacob room, where you have a whole bunch of different things in here. There's stuff about the indicator, where you get your day trades, your swing trades, our active trades, all that kind of stuff. And then down you go to the PT's area, and PT has his own room. And I know this seems like a lot of stuff. Most of this is just informational stuff that you can go through at your leisure. We only use a few different rooms for trading and the daily updates. But there's just a lot of information in there and learning, as well as trading, updates, everything. I'm giving the updates for the trades right here. They also go in day trade alerts. So every trade that we make is chronicled. That's how Matt, who comes up with all of the trades, profit and loss, gets them. Every single trade is right here. You can go back through every single day for as long as I've been doing this and look at every single trade. There is nothing that I am doing that is hidden. You can go back yourself and look at every single trade, and you can see all the good days, all the bad days, everything we've had. It's all chronicled in here, and I have my own trading journal as well. So everything is done in Discord, and if you sign up for PT's room, you get all of his stuff too. If you don't, then you just get my stuff. When I'm live streaming, the only updates in the room are the trades, because all the updates are coming on the live stream. So there was not many updates. But in my room, you also get updates throughout the day of what's going on, what levels are important, what we're looking for. Is it a trend day? Is it not a trend day? Where would we expect price to go? What is the pullback level? What are the levels? What's support and resistance, etc.? What are the counts? You get access to my charts, etc., etc., etc. And if you look at any other traders out there, most of them are charging 98 plus for their service a month, and you get mine for 49, which is half of that, and you get mine and PTs for 98, which is, I think, a heck of a deal. There are some people who've been in earlier who even have a better price than that, but I try to keep it reasonable. I haven't tried to price gouge or anything. I try to stay competitive with the market and keep it reasonable. I think that I'm not here to take all of your hard-earned money. I want some compensation for my time, but most of your money should be going toward trading, investing, and hopefully building a retirement. What are the costs for real-time data? I believe it's $7 a month because you need that for the indicator. Yes, you do need that, and I think it's $7 a month. I'm going to move my stops to 360. Remember, guys, we bought this for $2, and now our stops are $3.60. We almost have 100% on our stops. If they can push a little higher, our stop will be 100% gain. That's crazy. Great buy. Yeah, it was. The indicator nailed it. It absolutely crushed it. It wanted to get in here just a little early, though. They're coming into yesterday's high here. They're just below it, about 70 cents or so below it. Would be a reasonable place to see them kind of pull back a little bit here. Again, guys, if you're just joining the stream, we got a buy signal 4 bars into the day. It's absolutely ripped to the upside. We're crushing on our trade. Highlighting the indicator for IWJ Pivot Point Pro. Make sure you check it out. We are given 30% off of the first month during this live stream. That coupon code will go away after that. Okay, we stopped out there at 360, so I'll have to do some math on our average exit. But a really nice win. They're probably they're looking like they want to hold and continue here, but they did run us out there, and that's okay. We want, we're happy with our outcome there. So let's get our average exit here. $2.83 on our average exit. Beautiful day. Remember, guys, if you're trading 25 contracts, which is what I trade, you only have to average 16 cents per day in order to make $100,000 a year. If you were, give me 1 second here. So if you were trading 25 contracts with me today, you made $1,275, which would have paid for the yearly indicator 2.5 times. Not quite 2.5 times, but 2 times and some change. So you could have paid for your entire year of indicator, had $700 profit, and had a wonderful day and had steak and lobster for dinner. So this happens over and over again. Yesterday was well over $1, so it was over $2,500. $2,500 yesterday, so that would have been, this was a huge winning day. Nice winning day here, huge buy signal. Over and over again, this thing pays for itself, and you just get to take all the stress out of trading. I only trade on one screen. I just have this screen up. It's super simple. You beat the market. You're stress-free. You size. You get the instructions. All you have to do is follow the rules, and you will do very, very well trading with this indicator. Very well. $0.16 a day equals 100K? Question mark. Absolutely. Absolutely. 16 cents times 2,500, because you're trading 25 contracts, is $400. Times 5 days a week is $2,000. But if you just do it by day, because there's about 220 something trading days in the year, 220 times 400 is or 240. I'm sorry, there's 240 trading days in the year. I did that wrong. 240, and that's $96,000. So yes, 16 cents equals 100K on 25 contracts. How much did you make last year? We made $30,000 on a 100K account, so we were up 30%, and we had just a miserable November and December. We were actually up over almost 50K. We were up over like 46K going into November and December, and the market did some really crazy things, and we gave some back, but that's part of trading, and that's why it's a long-term game and not a trade-by-trade game. So last year we were up 30%. We're already up 30% this year. We're $29,000 profit the first 5 months of the year. All trades chronicled by somebody outside of me that is a paid member. So they pay to be in my group, and they keep track of my trades to keep me honest. And we were up $29,775 or so this year through the first 5 months of the year. We made some improvements on the indicator, and that has come through on how to deal with trend days and things like that. and that is what has really changed how we do. But yeah, absolutely, 16 cents a day is 100K on 25 contracts. You got to remember the power of options is big. 25 contracts is controlling 2,500 shares. 2,500 times 16 is $400 for the day. Today we've made, like I said, $12.50 or whatever. How tight are your stop losses? So I go through that at the beginning. They're 50 cents of price, meaning if we got in right now at 601 and we were short, then our stop would be 601.50, 50 cents. Give me 1 second here. Now we do have trend day possibilities today because they have pushed over the pre-market high, and they are now starting a little bit of a pullback here. As long as they hold the 21 in VWAP, we would expect them to continue higher. If they break down through VWAP, then we would look at it as a failed break out, and we would look for them to come down and test and or break the pre-market low. So somebody asked how much we made last year. I have all these trades chronicled. I have all of our results. So you can see that last year we made $35,475, and that was with a just miserable December and November. They were just bad, and that happens. We had 9 winning months, including a 5-figure month and an $8,000 month and $7,000 month, and ended up $35,500 on $100,000. This year we're already up 29,725. May was not a great month. There was a lot of chop in May, and a lot of the moves happened in the pre-market, and then the actual day was just sideways choppy nonsense. So that's part of what you get. But we've already had our record month this year, almost another 10K month, and May was a little bit slow, but June's going really well, and we're on pace to crush this total for the year. And just because averaging 16 cents a day gives you 100K doesn't mean that's what we did. I'm just saying when people say that pennies don't matter trading options, they're not paying attention to how powerful the pennies are. But if you're making 35% on your money and you can find that somewhere else, by all means, go do that. Go find 35% on your money somewhere else. I'm not sure where you're going to do that, but that's what we do here, and we're doing even better this year. So just to give you an idea. Oh, we have a sell signal. We are going to take this sell. Typically on a trend day you wouldn't, but we haven't fully hit the trend here. Sorry, I was talking, so I'm not at all ready for this sell. So I'm going to need to take a second to get this sell set up. Come on. Quickly now. I always take the first one, even if it is a trend looking day, because failures happen, and when they do, they're spectacular, and you can get really good. So we're going to get 600 at 145 on that put. $1.45. And our stop is going to be 601.20. We'll see if they can back test the 21 here. That's really what we're looking for, is a back test of the 21 or the pre-market high. They're both basically at the same spot, this 600 level. That'll give us our first profit take. And then we'll see if they break through from there or not. If they're able to get down there. First of all, they got to follow through. But after this extreme run up of 12, 13 bars of green with only one red, I would expect a few red bars here. Our entry price was $1.45, so that's 14.5 cents, which is 29 cents, which is $6.74. $1.74 will be our first take. Should we get that price? And then, of course, our stop is 601.20. Now, if this sell fails, I will not take any more sells today. They have established above the pre-market high considerably. They are now kind of back testing, and if it's a weak back test and a breakout back above this high, that is a warning sign for the bears that they're going to try to trend higher into that 605 plus area. There's a very, very good chance this can fail. I do understand that. So when we're taking a counter trend off of such a strong move, we understand that the risk reward here is probably going to be like 2 breakdowns and probably like 3 20% wins and 5 losses. Those 2 breakdowns, though, would be spectacular because they're going to come likely all the way back to the pre-market low, which is 597. So we're getting 3 points down, and the break evens kind of cancel some of the stop outs. So it's a trade I'm willing to take here, even though they do have a trend day started. They haven't fully given us what we need. So for it to be a full trend day, now they need to pull back and break back over this high. If they break back over this high, then we'll be on board with it being a trend day and only looking for buy signals, which we probably won't get because of how strong the buying already is. I know that could be confusing the way I said that, but if you watch the videos, you'll understand. So in essence, what we're saying is this trade has about a 50% failure rate. However, the winners have very, very strong potential. So we're okay with that 50-50 risk reward because our risk is only going to be a little bit of a stop out, where our reward can be a 3 or 4 point move down even more if they decide to drop the bottom out. If we see a sell signal, we ignore it. On trend days, yes. So if they come back and take out this high, I'll likely be done trading for the day because they've established a trend, and most of what we're going to get is sell signals, and they're going to be weak sell signals, because what the indicator does is it just plays probabilities. And it looks at, like I said, 175 different things at a different weighted value. And it says, okay, what is the most probable outcome here? Well, it's going to look at every single major resistance level on the way up as a sell. Now, that doesn't mean you're going to get a sell signal every time. It means that if it rejects off of here a little bit and gives you the right parameters, it has to have all the right setups, it's going to give you a sell. Well, on trend days, what happens is you hit resistance, you pull back a little bit, and then you blow through. On normal days, which is the norm, so the standard is you hit resistance and you do this, and you get a winning trade here. Whether that's a small winner or a big winner is to be determined. On trend days, what happens is you do this, and then this, and this is a loser. Well, the indicator is still looking for places for the market to reverse, so it's going to naturally look at key areas, and those key areas are going to, if they provide a rejection, as we see here, potentially set up a sell. So on trend days, it's still going to look for sells, but those sells don't play out because the market is breaking through resistance. So again, on standard days, you're getting this, which is more often than not, so that is the highest probability. And on non-standard days, you're getting, the trend setup, which is the lowest or lower probability. And so we take the higher probability route when the setup is there. Hopefully that makes sense. Now this did reissue a sell because it gave us a sell stop here, but essentially we're in the same trade. We haven't stopped out. I don't use these stops. They're a little tight sometimes, and they protect traders that need protection. For me, I set my own stops, and our stop is basically the prior high, and we'll see what happens. If they get through the prior high, then we're basically done for the day anyway. But this is all essentially one trade. Even though you have two sell signals here, it's all essentially one trade. Some sideways consolidation here, not uncommon after such a strong move higher, taking a breather. like to see them back test the 21, as I said. That would get us likely to our first take profit, and then we can see what happens from there. But it does not look like at least right now, it does not look like a strong move by the bears yet. They're going to have to break through some levels to get going, but as of right now, bears are struggling to push down. So price will never get too far away from the 21. This is something I also teach in my Elliot Wave classes. Price will come back and touch the 21 on all time frames. It'll never get too far away. And it can get back to the 21 in two different ways. So the first way is the obvious way, right? They can get up here, it's too far away. They come back, they touch it, and then they continue. The second way is a little less obvious, but most people know it. They come down and kind of give you a pullback in time, and then the 21 is able to catch up to price, and then they go higher from here. And they never really give you a drop in price. They just give you a whole bunch of sideways price so that the 21 can even out and then move higher. So starting to look like a pullback in time for now. Again, those things can change and they can break down, but as of right now, bear's still looking fairly weak. Again, guys, if you just joined the stream, we are highlighting our indicator. We got our buy signal down here at the bottom, raced it up to 601.40 or so. 601.20. Really big winner there. And now we have a sell signal, but with the established trend here, we're not super confident it's going to play out, but we're going to give them a chance to get one sell through. And if they do, we'll take it and see what happens. But if this sell fails, we will go ahead and call it a day and take our profits and go home. And that's kind of how day trading works. You don't need to sit here and trade all day. You don't want to sit here and overtrade. You took the trade of the day. I mean, this is likely, until the Fed, this is likely the biggest move of the day. They can certainly reverse it, but we got the biggest move of the day. So we don't want to sit here and trade all day. We want to trade what's likely. And once you get a trend established, what's likely is continuation. So we cut it off at 10 a.m. no matter what, but we can also cut it off if, trading stagnates or we have a trend day or something that we're just not going to trade. All right, bears are trying here. Let's get down and tag the 21. Don't forget to like, subscribe, share, comment, any of those things. They help me out, help out the videos. And it helps people out. If you got friends and family that want to trade as well, help them out. Help them get in here and do it. We're here to help people. That's why I do this. Trading is a boring, lonely game, but it's a great game. And if you share it with people, it becomes an amazing game because you get to see their successes and the things like Maxime put on here earlier about he just made enough to pay for his entire yearly indicator and then some today is awesome. That makes my day. That makes my week, makes me happy. It's why I do this. I love seeing people do great and make money. And I think we're coming into a very, very difficult financial time in this country that people will desperately need help. And I hope that they can find someone, whether it's me or somebody else, that can help them because it can be very devastating. Don't forget, tomorrow is a holiday. Market is closed tomorrow, and Friday will very likely be a low volume, um, choppy day. I actually will be out on Friday because of that. We have a camping trip planned, so we'll be doing that for the weekend to come back Monday ready to go. We are going into a holiday weekend, which tends to be bullish in general, so we've already seen a strong bull move to start the day. We have the Fed catalyst later in the day, so we'll see if that plays out, or if on Friday they rebound any any Fed drop. But typically, holiday weeks are bullish. Mohammed says, best trading community out there focused on technicals, risk management, and proper mindset. Both Jacob and PT are very humble and approachable. I really appreciate that. Thank you, Mohammed. That means a lot. I know I definitely have my grumpy days where I get asked the same question like 15 times in a row, and that gets a little annoying, and I should handle that better. That's on me. But I try to be a person that you can reach out to and talk to and get help from and all of that stuff. So I really appreciate that. Thank you for that feedback. Not seeing much weakness in the ADD. So very often when you're going to see a trend day fail or a breakout fail, the breakout is moving up while the ADD is moving down. That's the advanced decline line, if you don't know. And the ADD has been moving steadily up into trend day numbers. It's at 1140 right now, and you want it to be over 1,000. So doing from that standpoint, we're not seeing much weakness. Also, the Volt is very green. We're seeing 3 to 1 and 5 to 1 and 3 to 1 and 3 to 1 on the exchanges. And that's all very bullish as well. So I would be surprised if this pullback takes shape as a bigger drop. But it's certainly, things change. Money changes. The slow move up can be reversed with a heavy drop of money. But we face value right now, things look bullish. Because of all that bullishness, I am going to move my stop to 601. And the reason is you have this line of defense right here. You have this breakdown candle and this line right here at 690. So there's no reason to let them come all the way back to the high when you have this wall of resistance. If they get back above that, they're very likely to take out the high. So there's no need to take that extra 20 cents of hit here. So I'm going to move my stop down to 601. And as long as they stay below that, we'll look for them to keep pushing down. But like I said, with the ADD and the Volt being bullish, I don't necessarily need to stick around on this sell and hitch my wagon to it and never let go. I mean, I'm perfectly fine cutting away a trade that's not working out. Now, currently we're doing okay, so there's nothing to worry about, but I do want to move my stop down to 601 even. Thanks again, Jacob. Despite having the algo and the 20-second YouTube delay, I like to be here as it's helping the mindset, and enjoy your comments. I call off for now until 2 p.m., where market will move. Have a great day, trading friends, and stay green. You as well. Thanks, Maxime. I appreciate that. I'm glad you had a good day. We're all having, hopefully, a good day trading here. Hopefully, you guys have been able to make some money today, even though there is a delay. The market overcame most of that on that buy signal for sure. I did get another microphone complaint, so I turned it up again to see if that was better. Hopefully I'm not blowing your ears out now, but if it's too loud, let me know and I'll turn it back down. They're coming down to backtest the 21 here, which is what we'd look for. If they break through that, then we'd look for them to come on down to VWAP. If they break through that, look out below. If your first trade is green, do you keep your second trade at 25 contracts? I do. I trade every trade at 25. The only time I change the size of my contracts is so during April, we had huge volatility. It was crazy. There were days that option prices were like $6. I think even $7 one day. And that's insanity. So that's about 7 times as much as normal. So if you traded 20 at $7, that's, 14% of your bankroll if you have 100K. And you definitely don't want to be that exposed. So I did lower that to 10 contracts during April just because of the volatility. But each of my trades stays the same. I'm not here to try to protect a day. I guess I don't want to be like, I won today because I stayed up a nickel or something. I'm here to maximize my wins, and those wins can come in any trade at any time, so I take them all the same. The slowness of the move down is getting us. If they had moved down with any kind of pace, we would have likely been close to our first take. But they're moving so slow that time is the theta is getting eaten up on 0 DTEs a little bit here. So we'll have to go a little further down than we wanted to. We may take some off here at the 21 if it's reasonable. Like if it's around 68 cents, $1.68, we're close to our profit area. We'll just have to kind of see how it goes. But they're slow dripping this down right now, which is causing the price to move slowly. So hopefully we're able to get to our 174 take area. Yeah, $7 contracts on a 0 DTE is nuts. I mean, those were the days, though, when the market was moving down 125 points, up 125 points, then back down 125 points. It was insane. That was a good month. April was fun. May, on the other hand, May was just gap up or gap down, then sideways trading all day. It was really, really annoying. Almost all of May went like this. Gap up, and then the whole day was this. And then the next day was gap down, and then the whole day was this. And you never got any quality trades. It was a rough month. But that's the market goes in cycles like that too. So all of that evens out. All of that, sorts itself out over time, and that's why trading is a long-term game and not a one-trade game. I'll give you a funny story while we wait to hopefully close out this winning trade. I have a Rottweiler, and she's an awesome dog. And, of course, I have my daughter. And my Rottweiler took my daughter's sandwich out of her hand yesterday and ate it, which was kind of hilarious. My daughter screamed and said, "Dolly, you asshole." And I said, "Bobby." And she said, "Well, she's being one of those." I said, "Well, she is, but you're still not allowed to say it." 1 second here, guys. My son woke up, so I got to text my wife to come grab him real quick. Yeah, did you sleep okay? Mm-hmm. Good morning. The future of Invest with Jacob is here. Invest with Lincoln. Hanging out with me till my wife comes and grabs him. Huh, buddy? Yeah, we're cheering for the red bars right now. You see the red bars? Mm-hmm. Oh, do you hear Mama? Yep, she's right there, huh? Yeah, there she is.
I see you. Did you sleep good, my baby boy? Please,
Good. All right, we are at the 21. Let's see if they can push through and give us a closeout here. We need we're only at $1.60 here, so I decided not to take it off. We'll see if they can give us a little bit lower. This is a perfectly reasonable spot for them to hold and push higher, though. Back to the 21, back to the pre-market high they broke above, so they're just essentially back testing, and then you'd look for that. But if they break down here, then we can start to look for a little bit more follow-through from the bears. You have a rot two big personalities and love bugs. That's a fact. They are the cuddliest dogs ever, and they will turn into Cujo if people mess with you. That's why I like them. They super sweet, amazing dogs that have a pretty good aptitude for understanding danger. They play pretty aloof until the situation gets to where they have to react, and then they do well. All right, we closed technically below the 21 there. So let's see if they can just get a little bit more follow through. We're almost there. Again, guys, that 30% off the first month will expire once this live stream is over. So do take advantage of it. You got a 30-day money-back guarantee. You got nothing to lose. Just check it out and see what happens. We would expect them, if they can't hold right in here and push higher, to come down and test VWAP, which is going to be $599.50. And then we'll see what happens there. But they can still hold this area at 600 and try to push higher. I'm going to close half here at 165. I know that's less than 20%, but they're at this breaking point of they're either going to break down or they're not, and I want to take the profit right here where I can, and if they break down, we'll follow through with other wins. And this gives us a chance to just have a winning trade here instead of turning a winning trade into a loser. So we did take a little bit less than 20 there. We're going to set our stop to 145 and play this conservatively because the downside is weak right now. The trend is to the upside, and if they follow through, we'll make money and it'll be great. But we're really just protecting our profits here. We don't want to step over dollars to pick up pennies. And like I said, this 600 area is the call wall, so perfectly reasonable for them to hold here and push back higher. So we're going to go ahead and take a little less than 20% on our first take, and if that ends up being, they continue down, then so be it. We still get to collect on that, and we have an even better day than we're already having, and we don't give back any of our profits from earlier on missing a couple of pennies here on the downside. They got to 171. 174 was our take. And, it seems silly to lose the trade based on a few cents. So we took 165, and now we'll see if they follow through. Is it unusual for such a strong morning pull-up like we just had on the day of FOMC? Recently, no. So the odd thing about the Fed is in the bull markets of the early 2020s, so 2019, 20, 21, and 22, well, at least up to January of 22, you would have the bull markets, you would have this kind of day for the Fed, and then the Fed announcement, and likely you'd get something like this. But lately, we've had big moves in both directions on Fed days before the Fed announcement, and then continuation in a lot of cases. So a lot of times what you'd look for is a trap here. So you'd look for the bulls to do this, then the Fed announcement to do this and trap. But what we've been seeing is the bulls do this and then the Fed announcement and they do this, or the bears do this and then the Fed announcement and they continue to the downside instead of reversing. And so it's not, I wouldn't say unusual in recent times, but in historically, yes. Fed days are usually choppy and slow. So to see a move from wherever 597.50 up to 601 and change, a 30-40 point move higher, almost 1%, 0.75% or so. That's a little bit unusual, but not in recent times, if that makes sense. So we're starting to see some flattening out of the move here right at the 600 level. That's why I took some off. Again, you guys can, we have rules, right? The rule is take it 20%, but you can use some common sense and say, in this particular case, we're coming into a very key level. It's key for a lot of reasons. It was the pre-market high at 600.06. So they're going to come back test that level. And if they're bullish, they're going to hold that level. It's the call resistance wall at 600. So they're going to come back test that level. And if they're going to be bullish, hold that level. So this is the area they are going to hold if they're going to hold. And so we want to take our profit here, even if it's a little less than the 20%, because there's no sense in waiting for 3 more cents of downside and then getting erased into a losing trade when we could have had, 10, 15 cent winner, something like that. After this trade, I will probably shut down the live stream for the day. So remember, if you're going to take advantage of that coupon, it expires after the live stream is over. That monthly coupon for 30% off of your first month of the indicator. And then after that, of course, it would be regular price. You do get a 30-day money-back guarantee and instructions and everything on how to use it exactly. You can also get the yearly indicator where you get the beginners and advanced course for free. And I think that is by far the best deal because you're getting 2 months for free of the indicator. You're getting both courses, and the indicator, guys, is just crushing. As Maxime said earlier, this trade paid for his indicator for the entire year. He bought the yearly indicator and paid for it in one trade. And now everything else is moving forward is profit, and we have way more winners than we do losers overall. So keep that in mind. Take advantage of those coupon codes. If you already got it and you're making money, hit the like and subscribe and follow and share and comments and all that good stuff. Make sure you do those things. I appreciate it very much. And if you have questions, put them in the chat while we're waiting. I'm happy to answer them. All right, they're trying to push down here. Hopefully we can get a breakdown and a follow through, and away we go. Turn this into a monumental day. If you find this boring, then I'm doing it right. Trading should be very boring, and that's the whole point. Trade the setup, let it happen, move along to the next one. Wait for the next bar to tell you what to do. Should be very boring. If you're trading and it's not boring and it's high stress or emotional or high adrenaline, you're doing the wrong kind of trading, or the kind of trading that's going to cause you issues. I don't know if you, I don't remember if you spoke about it, but right now that price is holding EMA. Would that be more bearish than bullish? So it's not holding currently, it's below it. Below VWAP would be bearish. So very, very common for price to spike, come back down to VWAP or just below VWAP and then continue. That's kind of what we're looking for if we're looking for a trend. And it's very often why I take the first sell signal, even if we have a trend set up, because coming back to the 21 or VWAP is very common. That doesn't mean they're going to do it that time. Like I said, there's a high fail rate on those kind of trades. This one happened to work out for us. So right now it's kind of in between. If the bulls can hold anywhere between here and just below VWAP, then that would still be bullish. Technically, as long as they, from just a pure technical standpoint, as long as they hold above this low, they are making a higher low. So right now you have this low down here, and you have a high. You make a higher low, and then a higher high. That is a bullish trend. But the more common and more applicable bullish trend is to hold VWAP in the 21. Now, when you see VWAP start to flatten like this and not keep up with the 21, that tells you that average price is sinking or flattening for volume. And that means that the move up is not quite as strong as it may appear. So they're moving up strongly and VWAP is flattening. They're beating on this prior high from the morning here. If they can get through, they should come down to 599.50 to VWAP here. They still got to get through. For those of you that believe in the news, you know, Israel struck Iran, and tensions are extremely high over there, and no one is cooling down. I mean, maybe they did overnight. I haven't read the news today because I really don't care. Yet the market didn't move much at all. They tried to take it down and then immediately bought it right back up Friday into this week. And again, world war, any kind of war, the Russian invasion of Ukraine, we had a huge rally. So the market doesn't care about that stuff. It already has its levels. It already knows what it's doing. And the news is just a catalyst. The market is going to move on many news events, but how it moves is not correlated to the tone of the news. In other words, good news doesn't make the market go up and vice versa. And if it doesn't do it every time, then it's a useless feature. It's like saying, it's like flipping a coin and saying heads, and it comes up tails, and then flipping it again and saying heads, and it comes up tails, and then flipping it again and saying heads, and it comes up heads, and you go, ooh, see, I got it. No, you didn't. That was the time that it was heads, you know. So if the market is randomly going to go up or down on good or bad news, then you can't just say the time it does happen to correlate with what the news said, that the news matters. In other words, I can't say I called heads when I called it 3 times in a row, and the third time was the only time it worked. If the news comes out 3 times and it's good news all 3 times, and the market goes down twice, and then the third time it goes up, you can't say, see, the market goes up on good news. That's an irrational thought pattern. So, again, the news is completely irrelevant. There have been many studies to prove that fact. And what the Fed says today is irrelevant, honestly. The market knows what it's going to do before it's going to do it. And you know that because at 2 o'clock, nothing will have happened. They may have released a piece of paper that no one could have possibly read, and the market will move that far. 4 points. Without any possible way of knowing anything, the market has moved 4 points. It was already going to move 4 points in that direction. No matter what. That was the time the volume was set to be put in to push the market down. Just a little heads up there as we kind of wait for the market to try to break down. They did hit that 174 price, so if you held and waited for it, good for you. I was a little concerned about how they were reacting at 600, so I took a little more conservative approach given that we're up for the day, and we want to protect those wins. Key time here as they come into VWAP. Bulls will be looking to defend. As you can see, the small bounces here we're getting on the 5-minute chart. Bulls will be looking to defend this area. Bears obviously will want to break through. If the Bears do break through, the next major area is 599. It's a high volume level. You can also see that they failed it here, failed to break down here, failed to break, hold it here. So it's a key level. It's going to have a lot of support here. That would be the next zone to watch if they do spike through VWAP. But they got to get through VWAP first. Essentially, in the very, very micro term here, we have two levels to watch. This level right here at, what is this? About $600.30, and then VWAP. Break below VWAP, bears in control. Break back above 630 here, bulls are in control. Right now, bulls are still in control, but somewhat neutral. Ugh. If you're just joining us, we are trading the IWJ Pivot Point Pro indicator. You can see the discounts on the screen. We've had 3 trades today. One loser here right at the front that you don't see. This buy was a monumental winner, very big run up, really nice trade. And then we're in this sell that right now is guaranteed to be a small winner. But if they can collapse it a little bit more, we can turn it into a big winner. But right now, small winner guaranteed on this one. So 3 trades, 2 winners and a loser for a nice winning day. Showing you the power of the indicator and how it catches, bottoms and tops really well. It doesn't get you in way up here where it's too late or you're only getting a little bit of the move. It gets you in as close to the tops and bottoms as possible because it's price action based and not backwards looking. Don't forget to hit that thumbs up. Share the video. Shares are really big if you guys want to share them. That's really important. YouTube loves those. And it helps reach a lot of your followers and people if you want to help them out. If I were to predict it crashes, then we might get a rally or vice versa. I agree. The difference is you have to have your levels. So if you're going to predict the crash, what level signifies we're in the crash? If we're going to predict a rally, what level signifies we're in the rally? This is very controlled all the way down. So unless the bears are going to step up their game here, I don't have high hopes for a meltdown. Very methodical, slow selling. That's usually not indicative of a meltdown because the bears don't want you on board if they're going to melt down. They want to do it quickly and they drop the bottom out, and by the time you want to get in, it's too late. Bulls are trying to push back through here. They've recaptured that 60.33 level. They just got to go ahead and accelerate here, and then we would look for them to come back up into this 60.88 level next, and then test the highs. Ugh. Held on there, haven't stopped out quite yet. We'll see if they can fail it here. Overall, guys, remember the path. The primary path is higher. I did talk to my group yesterday, and I said, if you made me pick a way for Fed, I would probably lean lower today. There's just been a lot of weakness, and it hasn't acted like a 3 of 3 like you would expect. And the MACD on the daily has the negative divergence, and it just it doesn't have the feel of a breakout. However, that's not tradable. That is just me saying that's what I think. I could be very wrong about that. The primary path is directly higher, so it just doesn't seem like it's following it properly to me. Doesn't seem like it's following the typical pattern you would expect. So because of that, I think a surprise down today would be perfectly reasonable. But the key takeaway is you only trade setups. There's no setup right now for Fed day. There's lots of times I do earnings in my room, and I'll say this is a pretty clear up or this is a pretty clear down. This is not one of those cases. This is we'll see. But if you put a gun to my head and said, what's it going to do? I would say down. Nice hammer at the bottom of the pullback wave. Yeah, I mean they can reverse off that for sure. They're right at. I'm kind of impressed with the resiliency of puts right now. I would have thought this spike up would have got us to stop out, but price for options has been holding strong, which can be an indication that, people are still buying puts regardless of price because it's about demand. So interesting to see that. They are dealing with call resistance. I know the market makers want to close below 600. They would very much prefer that. That's where a heavy line of options are that they don't really want to pay out. So just some interesting notes as we head later in the day. Again, nothing to trade off of. This is just simply me pontificating on what I'm seeing before we head into the Fed. And And down doesn't, of course, mean a big red bar straight down. It can mean this, or it can mean, something like that. But lower in price overall for the day is what I mean. Right now we're at I would say this has a fair shot of being the high of the day. Fair. Not good. Given where we're at, heading into the second half of the day. Downside here, we're definitely getting a pickup in price. Price is at $1.83, which is a new high for this particular position we're in, and they just made a new low. So that means there's definitely some volatility coming into puts here later in the day, which can also be a warning sign. So we want to keep an eye on that. We are coming into VWAP, which would be expected to be some support here for a potential bounce. So we are going to close another half here at 186. And we're going to keep our stops at 145 for now. Reason we took another half off is we are coming into VWAP, which can be a very strong reversal point. So we don't want to get, give up all the profit we just got on the way down here. We just made 40 cents real quick. We don't want to give all that up should they hold VWAP. So really, really, really good day today, guys. Again, this is how the indicator works. This is why it's so great. This is why you need to be a part of it. I want to help you trade, and if you follow the rules, the indicator is just really awesome for that. So as we continue to melt down here, we're going to move our stops up to 150. If you don't love the indicator, I'm not sure what you're looking for. I mean, the market has moved up and down. We had the bottom and the top, and that's all you can ask for. I mean, you can't make the market do any more than it's going to do. So when it's doing whatever it's going to do, you want something that's going to help you with capturing the gains, and that's what the indicator does. So I hope you see how powerful it is. Today was a really good example of it. Of course, there are going to be days that suck because that's part of trading. But if you understand all of that and understand how to follow the rules of the indicator, you will make money using it. How is it on daily charts? Not bad. I actually use it on the weekly. So if we go to the SPY weekly chart, you're looking for a few months out when you do the weekly. So this double top, by the way, on the weekly, this kind of, they call it a tweezer pattern. Should they close the week down here somewhere, that would be a very bad sign for the bulls. But on the weekly, you can see all the way down here somewhere. Where do we get that signal at? Right there. So it gave you a buy all the way back here at 566, and they ran it up to 605, I believe, or 604. So what's that? 34 and 5, about 37 points. About 15% up from this buy signal. Remember, we always take the weekly buy at the close of the week. So right around 566, 567 is where you got in. But it gave you this buy signal right here on the short side. It gave you the sell all the way back here at December. And you had to fade some of this holiday rally. You may have gotten stopped out. That's part of it, just depending on what your risk tolerance is. My particular goal for this would be you get in the sell. You would have gotten in at 595. They dropped it down to 575. So 20 points in 2 weeks. You could have taken profit down here and then maybe got stopped out on the way back up. But if you did not, because you didn't get a stop on the weekly, then you were able to capture the entire down move. Again, that's up to your risk tolerance and how you trade. But either way, that should have been a successful trade. And then the biggest difference on the weekly chart is stops are considered reversals. So you see here, you got a sell signal that failed. So you got in this sell signal at 562. You got out at 570. So an 8-point move up, you got kicked out. But this sell stop tells you to get long. So you flip back to long at 571, and they immediately took it up to 609. So you got 30 points of upside right after that. So does really good on the longer term charts. I use the weekly for swing trading, and then I use other setups for smaller swing trades. But I do know people that use it on the daily. That's up to you. Again, I would use it per the rules, and if you do that, you'll do well. While waiting for movement in the market either way, might you be able to share on the screen your indicators and some settings? Yeah. So I have 8 on here. Most of them are turned off, honestly. The only ones I really use are the Mentor Q levels, my Pivot Point Pro key levels. Key levels just simply give you like yesterday's high, today's high, pre-market low, all that kind of stuff. It's a really good tool, really simple. It's free. And if I go to more about, I think it's this one, about, does this tell me about it? Yeah, so this is key market levels, pre-market open yesterday, etc. And it's done by Liquid Trader. So that's a nice one for that kind of stuff. Volume is just basic volume. I don't do anything with it. I have Keltner channels on here. I don't use them, but you can put them on if you want. But I put a lot of things on charts. I can delete this that I just test out and see Because what I like to see is, does it coincide with my indicator in any way that I can improve it? So do the Keltner channels give me better entries, worse entries, things like that, that you can look for and try to figure out. The 21 in VWAP, those are the red or blue and black. Standard volume at the bottom, and then Mentor Q, and that's it. So try to keep it really simple. I know it says 8, now 7, but really it's not anything too flashy, honestly. Again, guys, the coupon codes do go away at the end of the live stream, which will be when we stop out of this trade, or I guess if we never stop out the end of the day. If they just collapse it down to 500, that'd be great. Super unlikely, but great. Whenever we stop out of this trade, I will shut it down, or if we get to the 10 o'clock call, my daily call. If we're still in it at 10 o'clock, I'll just do the daily call on here. Everybody can have it all at once. You guys can have a free daily call. So cheer for the Bears to hold on till 10 if you want the daily call. So one bearish sign today is you have a very green Vold. You have a very green ADD. You have very green stocks. If you go down the stock list over here on my right side of my screen, they're all green. There's not one red thing until you get down to Google's and silver. Everything is green, and they're not able to continue this breakout. That is a little bit of a red flag that this is false strength or weak strength. That's an oxymoron right there. Jumbo shrimp. That this breakout is weak, because they should, with all of the support. I mean, you have NVIDIA's up almost 1%. You have the semiconductors are up over almost 1%. The banks are up 0.5%. Transports are up almost 1%. You're seeing RTY's up almost 1%, and you're not seeing the market able to break out. That's a continue its breakout, I should say. It's kind of hesitant here. That's a sign, a potential sign of weakness, because you should be seeing a market that's rolling higher. Now, again, it's up 0.5% or a little less than 0.5%, but certainly not rolling like you would expect it to be. So remember, we took profit at VWAP because I said this is a very, very, very common place for a reversal. And that's what you're seeing right now. And that's why we do those types of things. So many people want to get greedy and say, oh, if it breaks VWAP, we can come all the way down. Yes, you can. But if you don't take any profit here and they reverse it and stop you out, you gave up a lot of money for no reason. This is a very likely bounce spot. We got our profit right here basically at VWAP. And now they're trying to bounce it out of here. And if they stop us out, we significantly improve our trade outcome. Do we have 5 down? Like right here? This? Are you talking about this? Have faith it will break out, all-time highs coming. That is the direct path. So we did get a buy signal flash there, and then it kind of went away. So you have 2 options here. You can stay in your trade, your short. You can close out your short and take your profit and switch to a long. Or you can just exit your short and not take the buy. I will probably exit my short for $1.60. In fact, I am going to close out for $1.60. And since they gave us a buy signal, I'm going to go ahead and take it since we won that trade as well. But I was going to take it. I'm still putting it in, so we'll wait and see how this kind of plays out. I closed out my put for $1.60. I'm getting the buy together here. I want to see if it kind of holds here. 601 at 126. Okay, 601, 126. $599.75 as our stop. All right, we'll take one more trade here since we did win that last one. We'll get the average exit here in just a second. I'm not super confident in this trade. In fact, I always say the indicator's smarter than me, so when it wants to go, you go. But getting close to the 10 o'clock call anyway, so this doesn't move fairly quick. I'll probably exit it and just move on, but we'll see. Maybe they have a breakout ready for us off of VWAP, which would be expected here. So we're going to take the flashed buy signal and see how it goes. 601, 126, 599.75 is our stop. $169 was our average exit on the short trade. So we made 24 cents on that. Not bad. 169. That puts us really nice day. Puts us in a really nice day, especially if this buy works out, then man, what a crusher. Well, you guys got a little bit of extra time here since we took one more trade. I was going to shut it down there, but we'll give it the old college try here for the last little bit and see how it goes. See if we can make a little bit of extra money and not get beat up too bad on this one. Should be okay. Got to break out over this level here. Obviously, this is going to be your sticking point. You got this breakdown candle right here coming off of that. So they got to get through that in order to continue to push here. Yeah. Mm-hmm. Well, I said I was skeptical. We'll see if they're able to hold this low here or not, but looks like we may stop out of this one. Maybe. Price action slowing down quite a bit here. I don't think that's uncommon given that we have a major catalyst coming up in a couple of hours. So, not sure we're going to see any more huge moves. I think you're seeing already volume has dried up quite a bit. There's very low volume right now. So I think everybody's waiting for the major catalyst later, and we'll see how this trade goes. I may exit it if I can get out around break even or so and just take my day and move on. I don't think there's anything wrong with that. See if they can push this back up. Jacob, I have just found you through some trading friends. How did you accumulate the trading knowledge you obviously have? Lots and lots and lots of losing. No joke. I've been doing this almost 25 years now, and I blew up when I was in my 20s. I blew up probably 2 or 3 accounts, not having a clue what I was doing, just clicking buttons and watching money evaporate. So then I got serious about it, started learning about Elliot wave theory, got really in depth on that, became very proficient in it, in my opinion, and then started looking at setting up trades, how to trade effectively with it. Moved on into day trading. I was not a day trader after my 20s because it scarred me. The 20s, the blowing up of the accounts scarred me. Very emotional, very, very bad trader. And I got with a very successful day trader and learned a lot of things. The biggest one, how to control your emotions and how to keep yourself calm and just understand your perspective has to shift from what's happening on a given bar and or trade to what the overall outcome is if you look at it in a big picture approach and how to approach it. And then he taught me more about day trading and not just randomly clicking stuff. Then when I worked with him to put together the indicator, we have the indicator now that does all that for you. So you don't have to go out and figure out all the levels and figure out where to enter the market. You get very precise entries from the indicator. And again, it's certainly not perfect because no one is perfect at trading. So no one can build the perfect trading device. Otherwise, of course, you'd be billionaires, trillionaires, I guess, because you'd never lose. But it just a lot of sweat, a lot of punches in the face, a lot of work, a lot of training, and just when I really, I guess, made the change is when I started taking it seriously, more like a business than just a hobby. So I really started writing down and building lessons for myself around how to identify things. And then, of course, I put most of that stuff into like Trade Waves Academy and Elliot Wave courses and stuff for you guys so that you have it. But a lot of that was just sitting down with those lessons and applying them to charts. So I'd go back because all charts act and react the same. They all, that's a David Frost line right there. All charts are the same. So what I would do is go to a chart that I'm not familiar with. So for instance, let's just say I'm not familiar with the SPY, and I would go to bar replay, and I would go back, however far, months, weeks, years, whatever, it doesn't matter, and then let the bar replay play the chart, and then try to understand where I would enter and why. And let's exit bar replay, and go through that exercise over and over again until I was right more often than I was wrong. And then I got just better and better at it, and then just practice after that. I bought coin yesterday. When you get a minute, can you check that one out? So I don't do this channel, and these live streams are dedicated to the SPY, ES, and Q. I will go through things just to kind of say, hey, we're bullish or bearish, but not break them down fully. And in my room, Invest with Jacob room, on my live call, which happens every day at 10 a.m. Pacific Standard Time, I go through any stocks anybody wants to see. If you want to see how one of those go, you can sign up for $5 on the website. You can get on today's if you want, but and ask about coin. But that's not I don't do that for these types of presentations. Looks like 5 down. I don't see 5 down or anywhere close to it, honestly. I mean, what would your wave 1 even be? Just one bar right here and then up. I would have to look at the sub bars, but I would not be very confident in this as 5 down. This first wave is pretty ugly. Me personally. Remember, this first wave also has to be 5 waves. It can't just be a push down. It's all got to have the right structures. So right now it's a battle of VWAP in the 21. You can see that they spiked VWAP, came back to the 21, failed it. Now they're kind of in between the two. They're converging, so we'll see who wins this little tug of war here. Overall, the day is bullish. The direct path is bullish. There's just something that strikes me about today as odd, or not today, just the overall structure of the chart with the MACD and everything else. You're just not seeing that breakout that you normally would. Now, the Fed, of course, can be the catalyst that gives you that breakout. Just an overall odd structure to me of volume overlapping, lack of breakout, lack of follow through from the bulls, even though they have bullish signals on the chart. Okay, so we did stop out there. We stopped out for $1.05. So we essentially, and this is stopped 1.05. So we essentially just canceled out the short that we had here. So really good day today. I appreciate all of you being on the live stream. We'll go over, if you're in the rooms, we'll go over everything on the midday call at 10. If you're not in the rooms, I highly encourage you to join those rooms and be a part of that, as well as get the indicator. You can see the power of it today. Had an awesome, awesome day. And that's what happens way more often than not. The indicator is usually pretty good, and we usually do really well, and we've proven that month after month, year after year. So those discount codes will be gone in about a half hour. I'll get everybody who signed up in access to the indicator. Have a wonderful day, everybody. Thank you very much for joining the live stream, and we'll see how the Fed plays out today.